my perception with old EF was like not naming the fact that like the killer app is finance, right? I think it was always dancing around what is the world computer for? It's for finance, and finance can take many different forms. It can be prediction markets, it can be stable coins, it can be dexes, whatever. But like that is ultimately, I think, the killer app. And now it feels like we're naming it, we're putting our finger on it, and like leaning into all those like great components. That it's a great use case, and it's a killer app.
Not a dividend.
It's a tale of two Kwan.
Now your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intro, first we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Joining us today, we've got special guests. First, we have returning guest, Avichal, managing partner and discount Tarun.
I was wondering if you'd bring that up again.
Yeah, that's right.
Good
That's right.
memory.
Welcome back. And joining us today, first time we have Tomasz, okay. Tomasz Stańczak, executive director and turnaround artist at the Ethereum Foundation.
Thank you for having me.
Thanks for being here. And I'm Haseeb, the head hype man at Dragonfly. We are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblocks.xyz for more disclosures. So we are assembled here at SBC in Berkeley. SBC is a Science of Blockchain conference, which is a kind of rotating conference that goes around the way. So we were lucky enough to catch the two of you here at the same time. But we convened today at a pretty dark moment, I think, in the history of crypto and certainly of Ethereum, which is we just got the verdict for the Tornado Cash trial. So to give a little bit of background for those who are just tuning in, Tornado Cash was a privacy-preserving anonymity protocol on Ethereum. This case is probably one of the highest profile cases in recent memory in crypto because it's considered to be one of these milestone cases for the rights of developers and the liability of developers for developing open source software. So there were three charges. There was conspiracy to commit money laundering, conspiracy for unlicensed transmission of money, and conspiracy to violate sanctions. On two of the charges, the jury was not unanimous. So there was a hung jury, which means that there is no charge one way or another, and the government can rebring the case. On the third charge, which was unlicensed transmission of money, he was found guilty by the jury. This charge has a 5-year sentence maximum. The other two charges in concert were 5 years and 30 years. So the most serious charge, which is the money laundering charge, has a hung jury. Now, what does this mean? It's kind of a complicated verdict. So one, the prosecution can decide to refile the hung jury charges. We don't know yet whether they're going to file, and I believe they have up to 70 days to make the decision whether or not they're going to refile those charges. The next step is sentencing. Now, one of the questions up until sentencing is whether Roman is free to, basically be free, go home, or whether he has to be remanded to jail awaiting his sentencing. It was decided by the judge that he should remain free. There's no reason why he would be considered to be a flight risk, and obviously it's a nonviolent crime. So the normal considerations about whether or not somebody has to go to jail for this. So he's free until now, until sentencing. Now, Roman was asked by a journalist as he was leaving the courthouse how he felt. And Roman Storm said, reportedly with a smile, it's a big win. The 1960 charge, which is the unlicensed transmission of money charge, is bullshit. And we're going to fight it all the way. You know how President Trump said, fight, fight, fight? We will do that too. So there were a mix of responses from different people. Some people categorize this as being a partial win. Obviously, having the hung jury on the most severe counts is at least not the worst case scenario. And many people perceived that the money transmission charge was perhaps the weakest charge from a legal perspective, because that charge, of course, is in somewhat conflict with what FinCEN has been saying. In the Tornado Cash case, FinCEN said explicitly that Samurai Wallet was not a money transmitter. And so it maybe is legally questionable why, if FinCEN, the primary regulator, is saying that you're not a money transmitter if you're non-custodial, then having a judge come out and say, or a jury come out and say, hey, no, actually you are liable for this thing that the regulator said you're not liable for. There's a very strong due process argument that, hey, this is not, you can't criminally convict somebody in a case where the law is this dubious about, one way or another, where should this go? There's many other grounds for appeal. There was evidence that was not admitted. There's a lot of other things going on. But the next step for Roman is sentencing and then to file an appeal. This appeal will likely take a long time and will likely be very costly. So this is not the end of this case, and we're going to continue following it. But what should be clear is that this is not what we were hoping for. We were very much hoping for an acquittal, or at worst, a hung jury on all counts. Him being convicted now means he has an uphill battle to face, and it's a chilling effect, very clearly, for all developers. It's no longer clear if you are building non-custodial open source software, where does liability begin and end? What are the rules that are imposed on you about what you should and should not do, even if you do not have control directly over the software? So these are questions that have to be now fought, and they have to be fought by all of us as an industry and by developers themselves in their rights to build this kind of software. It's very clear the stance from the administration, the stance actually we saw very recently from the SEC in their statements about Project Crypto, were very clearly in favor of the idea that developers themselves should not be facing liability, and we should not have this sword of Damocles hanging over their head if the government later decides it doesn't like what they're doing. But it seems very clearly the DOJ in this case, which began in 2022, is not in concert with the message we've been receiving from all of the other voices within this administration. So I'll stop there. I'll say, when I saw this verdict, my heart sunk. It was really hard to see that this is where this landed after all this deliberation from the jury. I think it took them like four or 5 days to get to this result. But it was very clear that the jury was not going to get to agreement on these remaining charges, which I take that at least as some confidence that the most serious charges the jury realized it would have been absurd to criminally prosecute somebody for something that was not clear to them was a crime. So I'll stop there. Want to get reactions from you guys about Tornado Cash verdict.
I think in some ways this is like even a more absurd outcome than trying to convict on all the charges. I think obviously a lot of people view the case as sort of privacy and privacy preserving software being on trial, which it kind of was. To your point, if Tornado is considered a money transmitter, actually having a hung jury on money laundering and the IEPA stuff, like by its logic, everything in crypto is a money transmitter. Uniswap is a money transmitter. Running an Ethereum node is a money transmitter. Obviously, this is stupid. Obviously, this violates like all sorts of theories, guidance put out by the government. And so, in some respects, I actually think, and obviously, we've sort of been talking about the RCA, which is now being coupled with Clarity, sort of making it very clear that like all this software is money transmission licenses do not apply. And so, it seems like in the future, it will be very obvious that like this was actually the wrong decision by the jury. Maybe that'll also be helped with an appeal, but it seems like it's actually safer for sort of privacy preserving software, which is the big thing that felt like at risk at this trial.
Yeah. Well, so to clarify, when you put a case on appeal, you can't actually appeal the jury. You can't appeal the decisions the jury made. What you can appeal is the decisions the judge made on the law. So the judge gave the jury very specific guidance about what are the elements necessary to satisfy a charge of unlicensed money transmission. And the key, I think probably one of the pivotal questions that will show up in the appeal is, what is the difference between facilitating the transmission of money and being a money transmitter, right? The argument I think that Judge Fela allowed to proceed in this case is that facilitation of money transmission does not require control or custody of funds, which is in direct contradiction of what FinCEN guided. Right? FinCEN said, no, if you don't have custody, you're not a money transmitter, end of story.
I think she said like the FinCEN guidance was informal. I'm like, well, what was the point of it then? What is the point of getting guidance from the government if it's not actually binding in any way?
Right.
Well, I think this speaks to two things. One, for crypto and AI, you start bumping up against these definitions, which were created and conceptualized in the world so far before any of these technologies existed that we kind of have. I don't know what other process you would go through other than the court system and in sort of parallel a legislative process to sort of relitigate effectively what the definitions even are. So in some sense, I interpret it, I actually think, maybe as a side note, I'm also chairman of the board at CCI, the Crypto Council for Innovation, which is us, Paradigm, Andreessen, Fidelity, Block, PayPal, SoFi just joined. So it's a bunch of credible folks and TradFi folks. And so we do a lot of advocacy work in DC. And I think to me, I suspect we'll end up in a good place. Actually, if anything, the lesson of the last, let's say 3 to 5 years in the US is that if enough good people have credible, grounded arguments eventually you can convince enough people, and then the laws will change, and the environment will change. And it's not easy; it takes work, but I think the American system is actually a pretty good system in this regard. I don't know what other path there would be other than somebody like Roman going on trial, and then people sort of having to litigate it. That forces the issue. So I just look at it as sort of like a necessary. It's like unfortunate that there's this individual whose life is now impacted, and there's consequences to that. But I don't know how else we would do that. And at the same time, I'm actually quite optimistic because this is really complex stuff, right? Like trying to explain to the average. I think it was in New York. Was that where the trial was? Yeah. Like you're finding random people off the street, and then you're trying to explain how smart contracts work to them. Like that's actually really complicated. And so the fact that like they got to the right place on 2 out of the 3 to me suggests like, wow, that's actually pretty remarkable that people are able to deal with this degree of complexity. And I'm actually cautiously optimistic that as painful as it will be, eventually it will get to the right outcome. Like if we just look at the history of cryptography regulation, for example, in the United States, like it eventually gets to the right place. It's painful to get there. So I don't know. I'm cautiously optimistic. Like I kind of feel like it'll. To your point, it's just like on the face of it, you look at it, you're like, this is kind of ridiculous. Like this doesn't make any sense. There's too many inherent contradictions here. And whenever you see that kind of attention, actually, ultimately, I think the American system gets there. I'm gonna butcher the quote, but it reminds me of that. You guys might remember that there's that Churchill quote. Yeah. It's like you can always. It's effectively it's like you can always count on the Americans to do the right thing after they do all the other things.
Yeah.
And so we're just like in the process of doing all the other things.
Yeah. I mean, one of the principles of criminal law in the U.S. is the concept of fair notice, and the concept of fair notice is that I believe the way it's stated is a person of ordinary intelligence should be able to understand what is prohibited and what is not. And this was one of the arguments that was brought up in the motion to dismiss, is that for these particular charges there was not fair notice, right? And I think to us that's really obvious, is that like I've spoken to so many crypto lawyers, and nobody was able to really predict how this trial was going to go. Even when the charges were initially brought, like if lawyers don't know what the fuck the government is going to decide is the right answer, or the arguments that they're going to bring, then how would a person of quote unquote ordinary intelligence be able to decipher that? So I think from the government's perspective, or I should say from the judge's perspective, Judge Fela, I give her a lot of credit for having. I mean, this is kind of a case of first impression, meaning that it's the first time anybody has gone on trial for something like this, and there's no case law, there's no precedent. This is really the first time the legal system is grappling with this question. And of course she's going to get stuff wrong, and she's got to make game day calls, and you're there in a courtroom and you're just trying to figure it out. And so I don't think it's necessarily an indictment of our legal system to say, hey, the trial court, the district court, probably got a lot of things wrong. And to your point, we should maintain optimism that the entire process is not finished yet. The entire process involves more and more judges, appeals court judges, looking back over the record and deciding, hey, were all these legal calls correct? And were there arguments that were not fully considered or fully understood at the time? At the same time, I also don't want to be, I'm sanguine the same way you are, that I think Roman will ultimately prevail. Yeah. And I think the more people who see this at higher levels of abstraction will realize, like, hey, very simple rules about like what is the standard for bringing criminal charges against somebody would dictate that, look, this might have been questionable. This person shouldn't end up in prison for it, right? Until you pass a law that's very clear to everybody involved what the rules are, nobody should be going to prison for it.
And that's what you say. Like you would ask the lawyers, and they wouldn't be able to predict what the outcome would be. But if you ask the ecosystem, the community people, the experts, they know exactly what the outcome should be. So then it's hard to talk about the partial win, because what you would expect is the acquittal on all the charges. And I think this is one of those battles that, like historically, when we look back, when we look at right to cryptography, PGP, and then you look at the Aaron Schwartz case and all of that happened, and we remember those battles. And then after years, it's so clear to the public that what the outcome should have been. And each time there is someone who is really suffering, like that one person that is being placed and has to go through that hell. Yeah. And I think that's the case for Roman. And probably focusing on the fact that he still has to continue that battle, and he takes it as a representation of all the ecosystem, all the community, saying, "Look, this is something to fight for." Yeah. And it's a massive thank you to Roman Storm and his team that they actually stay there and continue fighting. It requires courage, but it's something that is definitely very much worth fighting for.
It's also worth pointing out that this case itself is obviously very, very atypical, but it's also extraordinary to the degree that when the government brings charges against a criminal defendant, they win at trial 96% of the time. Acquittals are extraordinarily rare. So even to end up in a hung jury like this on the most significant counts is itself a testament to the fact that this is an extraordinary case, and it's one that very clearly, 12 people from the jury. Like my greatest fear was that you grab 12 people off New York and you show them, hey, here's a Russian guy and he made money was flying around in North Korea, used it. That they say, well, obviously that's money laundering. What else could it be? That they were able to grapple with the seriousness of the question enough to say, hey, it's not clear. And that's why our criminal system has this demand of unanimity, that it's not enough for most people to think one thing or another. It has to be absolutely clear to everybody that what this person did was criminal, and it wasn't.
And this was after what, like 2 Allen charges too from fail. So it's like, trying so hard, and yet it's not obvious.
Yeah.
It's really, I'm telling you, like I went in so skeptical when I first started CCI. I started engaging in political stuff 2 years ago, and I know it can it's a grind, but it's just like coming out of the last couple of years, I'm just so optimistic. I still can't believe we got like a stablecoin, legislation,
That's
like
true.
the SEC turned over, like. I don't know. I think it'll be okay. It's gonna be really painful for Roman, which really sucks for him.
Yeah.
And all credit to him for powering through and continuing to be optimistic about kind of his path forward here. But I don't know. I'm cautious. I'm more than cautiously optimistic. I think it'll work out okay. It won't be easy, but I think it'll work out okay.
The trial was anchored in the situation from 2-3 years ago, right? When we
Totally.
had absolutely no clarity. And if we observe what's happening now, it's great that it's happening in parallel and already shows that optimism towards what will be there in the next 1 or 2 years. So as you say, developers might be feeling on one side a bit afraid of those results, but also they understand that there's lots of guidance that says, in the meantime, there is clarity coming that says, no, you can build for privacy, you can build for the solutions in blockchain, and you can fight for all of this that we all believe in, and actually it's no longer should be feeling as a fight. It should feel like simply delivering the software for building the future of finance. That's becoming very clear.
I mean, look, I wish that were true, but at the end of the day, like a SDNY. So SDNY stands for Southern District of New York, which is the sort of the federal system in which these charges are brought. SDNY, the joke is that SDNY stands for the Sovereign District of New York, because they kind of just do what they want, right? They're sort of like these cowboys with respect to their pushes of, hey, this is our jurisdiction, this touches finance, so we're going to go after it. And what you can see very clearly is that there's not a synchronization between SDNY and what the general administration is saying, and certainly not what the agencies are saying. And when the government itself is not in unison, right? Because we talk about the government or like the administration as though it's one thing, but the reality is that it's not. And Roman is face to face with the element of it that's not. And if you're a developer, like, and this is and the reason why I say this is that at a certain point this becomes a political demand, which is that hey, you're telling us this one thing, and at the same time, this developer was just indicted for doing what you're telling us you want us to do. And the only way that gets resolved is through the political process, right? And so whether that's clearly passing a law like BRCA that clearly defines, BRCA stands for Blockchain
Regulatory Clarity
Clarity Act, which clearly defines what are, because right now, the reason why Roman got caught in these cracks is because we were trying to read between laws that were written 50, 100 years ago. And how you can read that is very up to the discretion of a judge, or up to the discretion of a prosecutor, for that matter. The only way you're going to totally avoid that is either passing a law or like having some kind of resolution to the criminal case itself. But until something is resolved, this tension is going to remain there, right? The line prosecutors at the SDNY are still there, and they still have the discretion to bring whatever charges that they want. So if the next person builds a privacy preserving protocol and they think that they follow the rules, but North Korea uses their shit, it's not clear from these prosecutors what will stop them from coming after you. So as much as I appreciate the optimism that you're delivering, I want people to be fucking angry about this. I want people to be angry. I want people to feel the injustice and do something about it, because the political process is ultimately what determines will this discontinuity or will this contradiction actually get resolved or not.
It there two thoughts on this. One, I mean, there is the history here too. Is, I mean, when were these charges first brought? Like 3 years ago, 2.5 years ago.
22, I believe.
Yeah. And so, you know, there's the way sort of oversight of these folks works too has changed, right? So like Jay Clayton is the new U.S. attorney for SDNY. He was, you know, prior to going in, he was an advisor to Electric, so I know Jay really well. And so, you know, the reality is there is a prioritization queue that happens in these situations, and I can't speak for Jay, but I have a tough time believing that, given his prior, you know, stint at the SEC and CFTC and the public records that he has, that he would have brought something like this. And so I think there's some solace, at least, that, like, at least temporarily, there I think will be, you know, more of an alignment between the parts of the government. But I think you're right that the long-term fix ultimately is probably legislative.
Yeah.
And that is actually where we need to, like, keep the foot on the grass. And I actually think there's actually a really interesting opportunity here for the right legislators. I've been pitching this behind the scenes to a bunch of people. Have you guys heard my rant on, like, LLCs?
No. Please, give me the LLC rant.
So it sounds like super dry, right? But so apologies for anybody who's watching who's heard me rant about this. But if you go back and you look at the history of the limited liability corporation, super interesting. It sounds super dry, but actually it's very, very interesting. And the reason it's interesting to me, at least, is it's actually a technology, right? And so, like, creating the notion of a corporation, like a joint stock corporation, let people put money into a vehicle and then let other people take that money and go pursue risky things with it, right? So the first joint stock corporation was the Dutch East India Company, and it became the most valuable company in the world. And before that, all you had was the ability to use your personal capital. So it was essentially the cottage industry, or you had a king who had a lot of money and they could go pursue these kinds of endeavors. And so it's actually a technical breakthrough. And so roughly from like 1648 to, you know, 1850, let's say, it's about 200 years. In order to create a corporation, you had to go to the king, and the king had to give you a charter and say, hey, go create a corporation now. And so some very smart people in the UK and the US said, wait a second, why do you have to go to the king? We don't even have kings. Why should you have to go to the governor? Why can't you just fill out some paperwork and start a company, start a corporation? And that was actually a big breakthrough, because now anybody could create a corporation. And so you could start pulling money, and you actually got, you know, this happening. And it happens to coincide with the Industrial Revolution and, like, the financing of the railroads. And so I don't think you get railroads or factories without this, like, technical breakthrough in the law, right? Law is very technical. And so it's a remarkable thing that happens. But if you go back and you read the discussions that people were having at the time, like the journalists or the politicians, they were talking about some really foundational things, like, well, what happens if a company kills somebody? Like, how does liability work? Is it like the people that give the money? Is the people that work there? Is the company liable? Do they have can they participate in politics? Like, do they have free speech rights? How does banking work for these things? Because what we did for the first time was we used to have humans, and we understood what a human is as an entity, as a counterparty to a transaction, all these things. And then you got companies, and you're like, well, what is this? This is like a non-human entity that somehow has to, like, interface with a bunch of humans. And so you get these sort of, like, quasi people, if you remember that quote, like, corporations are people. And, like, in many ways, corporations are people, but they're not in certain ways, in very important ways too, right? And that had to be litigated, and took a long time to sort of figure that out. I think this is for the first time since the 1850s that we've had to deal with that. You now have smart contracts and AI, which, like, humans can talk to and be on the other side of a transaction, and they can be counterparties to a transaction. They can talk like humans, they can transact with humans, they can pay humans to do stuff. It's like, it's a weird world that we're in now, and we have to relitigate all of these things, right? Like, who has liability when a piece of code does something? Is it the original developer, or is it the person who ran the code? Or what if the code's running on 100 servers at once? Like, how does this work? Do they have free speech rights? Can these things participate in politics? How does liability work? How does indemnification work? They're, like, actually all of these foundational things that actually we have to now think through for the first time in, like, 200 years. I think it's really interesting opportunity for somebody to do a, you know, like, seminal piece of legislation with their name on it, like, even bigger than, like, the Stablecoin Act, or even bigger than, like, Dodd-Frank, like something that goes down that's like, no, here is how humans and smart contracts / AI will interface with each other, and here are the rules around that. I think there's Roman's hitting on, like, this one particular point of friction, but there's, like, I could point at a dozen other points of friction that we kind of don't have answers to, that somebody needs to sit down and actually think about and, like, write the rules for.
Yeah, there are big questions just around the corner, as you say. And I feel this is also promising, that you see regulators that already start talking about the legislation for the blockchain. but they know that much of it refers to AI as well. So we tackling smart contracts and AI. Maybe this is a bit of an ally for all the conversations about smart contracts, DAOs, governance, that we have to start thinking of what if it's an agent, an AI taking decisions and acting on behalf of itself. So packaging these together, I think there's lots of similarities, and also we start building more and more often the contracts that will be integrated very deeply with agents and AI. So it has to come together, and good to see that accelerating.
So how do you think liability should work if your AI, you deploy an AI, your AI goes and shoots the president? What?
Short answer is I don't know. But I mean, that's a great example. Like, what happens if an AI pays a human to like do something in the real world? Like, where does the liability sit? I think the only way we're actually going to be able to litigate this is probably at the endpoints. So it's kind of like KYC. Like, there's a parallel to KYC in blockchain systems, which is like, I don't think you can like litigate it on chain very easily, especially like in a global context.
Yeah.
Because that's the fundamental assumption that's changed now too. Is like, I don't know if the counterparty is even in my country. So like, what even is the notion of jurisdiction? Like, before, everybody's in Delaware, and so like that's an easy thing to litigate. Here it's like, what is jurisdiction? It's on the internet, right? So I think the only way to really police these things is going to be on the endpoints. So it's like, when you want to move money back into the banking system, we got you. If you like commit an act in the real world with an unlicensed firearm, we got you, right? And so I practically speaking, I don't know how else you do it. Maybe somebody more creative than I out there could come up with something better, but that's the best I've been able to come up with. Is just like, you're going to have to litigate that, like the actions at the endpoints are where there's liability.
But it does work only as long as you have that banking system endpoint.
Yeah.
So the moment when we move entirely to the digital economy, then suddenly you have to start building those barriers somewhere else. I think that there is opportunity that much of those aspects of blocking the flow of money will be built through the smart contracts on top of neutral layer. Not that this is maybe the most desirable outcome, but I feel that's where it will go, right? So you'll have compartmentalization of the financial systems built on top of the neutral layer of blockchain of Ethereum. And as for the cross-border aspect, I feel the same. We'll be answering lots of questions of how can we make it work finally, that you can get insurance that will work globally, that you can get access to systems that will work globally, that will get healthcare insurance that will work globally, and so on and so on. So the travel link will be kind of respectful for the local laws, but also very much borderless. That's one thing. And then maybe we'll start thinking about the cultural aspect of training AIs, and we'll see what goes in and how we approach it. And we'll take a bit of responsibility, a bit of like parents taking responsibility of a child, but then trying to understand when the AI actually grows enough to be responsible itself, and like starting to ask questions about identity and privacy of AI, and thinking, trying to delineate this the moment when the AI transitions to be its own entity that you can actually punish by saying, "Oh, we have to disable this one," and probably lots of crazy cases will come out of it.
I like his answer. We should just ask the AI.
Yeah.
Well, like, the AI is smarter than us. We should just ask the AI
just
what the
ask
answer is.
ChatGPT to write all the legislation from now on. Okay, so I want to switch gears now to talk about some big news that you guys or you specifically announced last week, which is the launch of a ETH treasury vehicle called ETHZilla.
Yep.
So, for those of you who've not, I think we've talked a lot about MicroStrategy, and of course, there's been this generation of MicroStrategy-like companies for different digital assets aside from Bitcoin. There's a few now that have been launched for Ethereum. You guys are the latest, and a lot of the excitement around ETHZilla in particular has been the different way in which you guys are using the underlying assets that are being raised. So, talk to us about what is ETHZilla, what are you guys doing with it, what's different about it relative to some of the other vehicles that have launched.
Yeah. So, I guess at the highest level, I think the treasury phenomenon is an interesting one. I think it's gonna I think it's still early. There's a lot of people talking about how it's peaked and it's like kind of game over. I get 3 pitches a day still from bankers, so I don't think you guys should do probably as well.
We get a lot of pitches.
So I don't think it's anywhere close to over. I think it's gonna take quite some time for that to work through, and it's because there's just essentially this financial markets arbitrage that's happening, which is there are these massive credit and debt markets, and they will be willing to finance against collateral and make money. And from a company's perspective or an entity's perspective, if you have collateral and you can borrow against that to essentially put more assets on the balance sheet, you're arbitraging the capital markets, because you can borrow at 0 to 10% with some duration and go buy an asset that goes up 20, 30, 40% a year. And so I think what Saylor proved was like, if you can do that, you should just do that all day. You should just turn the crank, and he's now bootstrapped essentially $100 billion company, which is pretty remarkable. And so, we've participated in a couple of these. We did from the electric side, we did SBET with Joe, and we did BMNR with Tom Lee, and we're also committed to Andrew and Dave Marin's thing, which is a different sort of structure that goes out later this year. We're talking to a couple others, and the way we thought about it was, and then we sort of are a little bit more active with ETHZilla, which is currently known as 180 Life Sciences. And it'll get rebranded soon, officially. But the way we thought about it was, this is from a crypto perspective. I think there's a couple of opportunities. One is these are permanent capital vehicles that will basically, if done well, they just suck in Bitcoin or ETH or Solana or whatever, and then just never give it up. And so you have massive supply sinks. And so anybody who's been around in crypto for a while understands the value of having like high quality supply sinks that just suck in supply. Two, I think as constructions, if you believe in the potential store value characteristics of the underlying asset, like a Bitcoin or an ETH, it's a really interesting and unique opportunity. Like our house view, Maria on our team and Sanjay on our team a couple of weeks ago published our ETH thesis and sort of how stablecoins unlock massive growth now for ETH, the asset. And our house view is ETH basically is where Bitcoin was in 2019. It's 10 years into its journey, just turned 10 in July, right, a couple weeks ago. And if you look at the history of Bitcoin, and when Saylor started to do strategy in 2020, right about the same time in terms of Bitcoin's evolution. And it was really between like January 2019 and 2024 that Wall Street figured out Bitcoin. Like that's when Paul Tudor Jones flipped. That's when like Druck flipped. That's when everybody sort of said, wait a second, maybe this is actually a thing. And to us, history sort of rhymes in this way. And I think that's what's happening with ETH now. Like I think over the next 5 years, people will say, wait a second, this has a lot of really unique properties and characteristics, and people should own a bunch of it. And so then we were talking to some folks. We worked with the Etherealize guys on this. Danny Ryan, who was at ETH for a while, and Vivek and Grant, and said, if there's a vehicle that could be much more community oriented, that seems kind of the ethos of Ethereum. And so the Etherealize folks, us, some Wall Street people, and then a bunch of DeFi founders decided that we would try to bootstrap something like this, and try to make it happen. And so we have Konstantin from Lido, we have Sriram from Eigenlayer, we have Mike from EtherFi, on and on. And so I think Tarun and Robert, and so we sort of went through and said, who are the most thoughtful people in DeFi that actually understand the on-chain economy? And can we essentially create a group here and call it like a DeFi council? And those are people that can then advise this company alongside us on how to actually use these assets on chain. Because that's where this stuff gets really interesting, is like, not only do you end up with essentially a supply sink, but then you take all of that Wall Street money, potentially to the tune of tens of billions of dollars, and you pull it back into DeFi. And you use it constructively inside DeFi. And you can use it in intelligent ways to bootstrap new protocols. And so that's what Electric's doing on the back end, is we're going to help the company move these assets on chain and actually use them productively, and try to actually help new things get off the ground that are good for the ecosystem, and do it in ways that ultimately generate more yield back for the company. I think it's a really interesting phenomenon. I think it'll be not financial advice. Like, it'll be interesting to see what happens over the next 12 months with like rate cuts and how these things move. Almost certainly most of these things that are going out will implode, and it'll be bad. So
Implode like how?
It's like an ICO boom. It's just like any other speculative boom. Like, there are going to be a bunch. For example, I think there will be a bunch of these across assets that really, it doesn't make sense because they don't have store value characteristics.
Implode sounds bad, though. You don't think there won't be like a graceful wind down for the ones that don't work out?
I think it will be less than graceful, but not like.
Define what do you think will actually happen?
Well, I think what's going to happen.
Demolition.
Yeah, it'll be like a controlled demolition.
No metaphors. Just like what will literally happen.
Literally, what will happen. So I think you have a couple of different actors in the space. I think a bunch of these things end up subscale. So if you can only raise 250 million or 300 million, like we ended up closing 425 on the equity side. There's 150 in debt that's slated to close pretty soon. There's shelf offerings and ATMs. There's like all these like financial engineering tools that are available. So this vehicle will get north of $1 billion, I think. And Tom's at like 3 billion. I think Joe's vehicle was at like $1.5 billion, something like that. So I think if you can get above 1, you can spend enough cash that you can finance the operations of the business, right? Even off just base staking yield, you can make 30 million a year, you can pay all your operations, and there's just a fixed cost of being a public company. I think there's gonna be a bunch of these, maybe in ETH, maybe in other assets, that are at like 250 or 300. And that's just not enough to stay public. And today, these things trade at a premium to NAV. So if you have $1 billion of ETH on the books, you might trade at 1.5 billion, let's say, is the equity value of your shares, which opens up all sorts of possibilities on this financial engineering. But there will come a day where these things trade at a discount to NAV. They'll trade at like 80 cents on the dollar. It's like GBTC. Like we'll go into that part of the cycle. The thing with GBTC was it was private, so there's nothing you do about it. You couldn't release the assets. In this world, I think what you have is activist investors come along, buy enough of the shares, and then pressure the company to liquidate the assets.
Wasn't that also true for GBTC? Is that if somebody acquired majority of the trust, they could have dissolved the trust?
I think it was like sufficiently illiquid. I have to go back and read up on it because I think Bitwise had some similar things too.
Yeah.
I think it was sufficiently illiquid that practically speaking, it would have been quite challenging to do that.
Okay.
I also suspect the way Grayscale was set up and kind of the way Barry's very smart about this kind of stuff. The way he tends to operate, almost certainly there was a like eject button where like Barry says, nope, sorry, you can't do that.
Got it.
He's very smart about these kinds of things.
Yeah.
Which is why I think their IPO will go well. He's just very good at this kind of stuff. I mean, it's a monster business. They do something crazy like 600 million a year in revenue or something. It's like a monster.
Most of GBTC.
Yeah, it's like a crazy
like
business.
No locked-in fees.
Yeah, it's a really crazy business. So, so anyway, I think these activists will come along because these are public companies, and then you have a fiduciary question, right? It's like, well, if you're the board member or the CEO of one of these things that's trading 20% below NAV, yeah, you probably should liquidate if you don't have another plan. And so there's like a free 20% sitting there that can be captured by activist investors.
Well, so many people have speculated that it's not activist investors will come in, but rather M&A. Is that like the bigger vehicles will acquire the smaller ones?
I think that'll be a thing too. So
they'll pull up the MNAVs because they're trading. The bigger ones are trading at better.
Exactly.
MNAVs.
So I think that'll be a thing too. I heard somebody actually talk about a really clever idea. I don't know if they'll do it, but I think it would actually go over well, which is that Saylor would buy these out. Because
for other assets,
correct, and then turn around and dump the assets to go buy more Bitcoin, which I thought was brilliant. Actually, you could totally imagine because they have so much leverage. They have $100 billion of assets.
Yeah.
They get the most preferential terms on the credit markets. People love them, and so actually, as a sort of Bitcoin maxi, you could totally imagine. Like the community would love that. Actually, they're like, yeah, go take all these shitcoins and like dump them and crush them to go buy more Bitcoin. That's awesome.
Yeah, but is that bullish Bitcoin or is that just like you could buy anything and then sell it and then buy more Bitcoin? You know what I mean? It's like
I think if you have free money sitting on the table, right?
Yeah, it's like free 20%.
If you have a huge MNAV gap. And then it's like, yeah, you could buy it, dump it, and
I mean, it's free money only if you can acquire it at MNAV.
Yeah,
right?
yeah.
But like if you're actually like if they're willing to take that deal if they know you're going to dump.
I mean, it's generally under the umbrella of activist investor. So it's like if you can secretly acquire 5 or 10% of the company, and then pressure them, like it could be some activist PE hedge fund guy, or it could be Michael Saylor. Right. And like actually, to your point, if strategy continues to trade at like a 1.5x MNAV in a bear market, everybody else is trading at a 0.75. It's just an arbitrage. He should like buy as much as he can. They have to sell it. He not only gets to 100 by like liquidating the assets, he turns around and buys Bitcoin and turns into 150. Right. And so it's like actually an amazing arbitrage from a Saylor's perspective. And that guy's a financial engineering genius.
So it sounds like what you're advocating is just buy Bitcoin.
No,
is that not the hedge if you think this is what's going to happen?
Well, I think from an investor's perspective, I think there's a question about which of these assets are ultimately durable. And so if you're going to choose to take some exposure here and you think that there's like vehicles that come out on the other side, because I do think on the other side, there's an opportunity to build something really interesting, which is if you can end up with, let's say, 3, 4, 5 billion in this cycle, and you think ETH is worth 10x what it's worth. ETH is where Bitcoin was in 2019 when it was at like 8K or whatever, or 10K. You end up with an asset that has $30 billion in it that's valued at 1.5x MNAV, so it's worth $45 billion, and it produces $1 billion a year of free cash flow, right? Because the staking yield at 3%. And then you could take that and do really interesting things with it. And to me, that rhymes a little bit with like a Berkshire, where you have this sort of like obviously good asset in an insurance company that spins cash, and you take those assets and that cash flow and you like go invest in other really interesting assets. And so there's like an interesting crypto version of that I think somebody could do, that you start to like roll over really interesting crypto businesses that are just cash flow businesses that somebody could pull off. And I think that's where it gets like a little bit more interesting. But I think there's going to be a messy middle. Like I think a bunch of these things are going to be subscale. They're not going to be able to stay public. A bunch of activists will go in and make their 20%. Maybe Saylor is one of those people. There's going to be mergers. So it'll be gnarly, messy. But yeah, from our perspective, we're like, there's definitely an opportunity if you're a believer in some of these assets fundamentally to go tap a new part of the credit markets. The other thing is just interesting is like intellectually it's fascinating. It's like so different than venture. Like I learned so much going through this process, and it made me so bullish crypto because you work with these bankers and you're like, oh my gosh, like I can't believe like PDFs and emails and phone calls, and it's like so messy, and like most of these lawyers can't even use Google Docs, and so they're passing around, and you're like, you look at the file names, and it's it's like
UV11 final underscore.
And like I can't. I'm like I literally I cannot. I've never worked on Wall Street. I'm like I can't believe we're in 2025. And the way we're going to like figure out what the version of the press releases that we're going to use is like, press release underscore V32 parentheses RG edits and parentheses like underscore final. And you're like, this is really what we're fucking doing in 2025?
This is the opportunity,
No,
to
totally.
show how messy the traditional finance was. And like if ever, like, as you say, many things can go wrong here. And I feel that big part of the guidance, whether from Ethereum Foundation or the ecosystem, should be to learn how to scrutinize every single vehicle here. How to audit the processes and how to look at the DeFi part and the TradFi part. And I think that the messy aspect may come very much from the traditional finance way of wrapping the DeFi. What is a beautiful opportunity is that as we previously in the last years we've seen adoption of cryptocurrency and the custodial services, the TradFi learning how to simply hold assets on their balance sheets. What we're opening now is that hybrid model when they start interacting with DeFi processes. And on the Ethereum Foundation side, we can provide the guidance on how DeFi should look in the future to deliver the values that we strongly believe in. So how we can build DeFi that is privacy-oriented, permissionless, how we can provide the non-custodial services to everyone, and start integrating into the traditional finance systems and show everyone that way of transition entirely towards the DeFi and Ethereum economy. And exposing like the lack of clarity, lack of transparency that is hidden behind all the paperwork of the past. And I'm not saying that in these particular cases there'll be necessary lack of clarity, but we've seen that in the past with FTX collapse and so on. The things that or 2008, 2009. The things that you couldn't unwind, the things that you couldn't track was all the traditional financial ecosystem when you realize that the root of trusts are really scattered and hard to find in the moment of disagreement on what the balance sheets are. And then you look at blockchain, and that's where it actually provides all that transparency, all that resolutions, automatic settlements. And
DeFi is so much better. That was like my takeaway from this whole process is DeFi is so much better. And the hope here is, you end up with a lot of assets inside ETHZilla in particular, and we can move those on chain and support DeFi, but also that we can, like, I think it'll be, it's kind of related to the Roman thing actually that we are just talking about is like, the opportunity here I think is for the DeFi people to go in and capture Wall Street rather than the other way around. Like, I think it would be a failure if a bunch of Wall Street people came in and tried to like institutionalize DeFi, and we just ended up with like a bunch of, value extracting, like, people who don't really understand what these things can actually do, co-opting it. I think that'd be a failure state. A success would be there's people who actually understand the power of this stuff, and actually we like backport it into Wall Street. And we're like, no, like you should actually run this on an L2 with these kinds of smart contract constructions, and you get privacy in this way, and this is better. And like having some leverage to go do that into Wall Street is also I think like quite interesting. So
I've been thinking about my message for Wall Street, going to New York next week and thinking of talking about Ethereum, and the message should be really that we've built it together. When DeFi people look at the history of finance, like we've been learning of what exactly are the financial instruments. We knew the technology, we started building, experimenting, and we said, oh, okay, those are these more and more complex instruments, how we represent them in DeFi and how we improve them in DeFi. And on the side, you had all the Wall Street traditional finance people saying like, oh, we're limited by regulation, by the compliance. We cannot move there, but we start to understand that this is a better system. And now connecting those two worlds and almost like celebrating together that we've built this, that we've invented all the financial systems, the financial instruments that really solve the problems of risk in financial markets, right? But then in the past, we didn't have the tooling that really delivered transparency and settlements and like the global agreements and everything. So thinking of it as a success of both sides of arriving like to new tooling, new technology, but also through all the engineering, financial engineering to address all the risk challenges. That's great.
So speaking of Ethereum coming to Wall Street, let's talk about the general zeitgeist right now. Ethereum certainly has the wind at its back. I think over the course of July, Ethereum was up over 50% in a single month, just the ETH price. And it feels like everything is turning up Ethereum right now. So you mentioned Bitmine, which is Tom Lee's vehicle, is just gobbling up AUM. He's on CNBC every other day, bull posting about Ethereum, and it seems like now there's like sort of a narrative shift that's taken place. That to the remarks you just made, like Ethereum used to not talk about Wall Street. Like I don't remember from 2020 to 2024 any kind of like, oh, Ethereum's about Wall Street and getting assets tokenized and getting them. I mean, there was maybe some, obviously there's always some undercurrent of it, but now it feels like it is kind of the official Ethereum, call it narrative or meta narrative maybe. And I think a lot of this has been promulgated by Tom Lee, who's been this tireless Ethereum advocate to TradFi and to traditional retail audiences, who maybe before the position of Ethereum is that it's world computer, it's unstoppable, maybe it's about DeFi. Now it seems like the narrative is much more about Wall Street and about this is what Wall Street is choosing. This is where the stable coins live. This is, I think, what Tom Lee often says, it's the ChatGPT of crypto, or I don't know how exactly he frames it. But this positioning feels like it's very different and it's very much working.
I would say this is really would be going far to say Ethereum is Wall Street. It's much more. It's just opening to all the Wall Street cases of bringing the finance and global economy to Ethereum. But at the same time, we're just having lots of conversations in so many different areas. So we are very open to communicate with financial organizations. And we answer questions. And as you say, maybe in the past, that was just not of interest of the foundation, of other institutions, of the entire ecosystem. Now we say it's a critical moment. It's a pivotal moment when the regulation is changing, and hopefully this will spread globally. So you have to be responsive and say, yeah, okay, this is how you do it. Don't go the wrong way. We'll help you to see where the security is, how to solve all the problems, and have clarity. It would be really a disaster if just those people who are now open to build on Ethereum couldn't find good advisors on how to do it.
But you would say this is very much a part of Ethereum's reshift post the shakeup earlier this year.
It's part of being open to communication everywhere where it matters, and at the same time we're talking about lots of privacy initiatives. We go to builders of the next 10 years of Ethereum. We start talking about AI, about governance, and be on all the podcasts. And it's a pleasure to talk to you and be everywhere when people talk about NFTs. They invite us. We talk about NFTs. We talk about art. We talk about the value, the identity, about the big challenges for humanity, really targeted by Ethereum when talking about where decentralization is.
I will say, I think this is, Tomasz is being, I think, a little humble, is like, I think if you go back to the beginning of the year, end of last year, November, most people, I don't think it's a stretch, most people who have been in crypto for a while, and especially people who have been in the Ethereum community for a while, were very frustrated with the EF. The Ethereum Foundation, people were extremely frustrated. And it started to spill over, and you could see it publicly. And the tonal shift, I think, post Tomasz coming in is just night and day. We just had our founder summit last week. We do an annual summit for electric capital portfolio founders. And literally 5 people came up to me and were like, dude, what happened? Like, the EF is talking to me. Like, for the first time, I've been in the space for like 6 years, and for the first time, somebody from the EF like actually reached out to me. Or like I DM'd Tomasz. He just like put up his Calendly on Twitter, and like I just DM'd him, and he was like okay to talk to me, and they like almost couldn't believe it. And so I think that's a huge part of it. Is like, I mean, so many of these things are, if you don't have the community's trust, then people don't want to evangelize. If it feels like it's not working, then people don't want to evangelize, and it's like that. I think that set of changes culturally from the top, and so credit to the prior board and Vitalik and I and everybody sort of like saying, hey, we got to make a change here. I think it was pretty dramatic, and it's like palpable on the ground.
It's very clear that the change worked. Right. It's very clear that everyone feels the vibe shift.
Huge.
I'd say the beginning of this year, if you remember, like beginning of this year, Solana is about to hit $300. Trump is launching his meme coin on Solana. Solana basically felt like it had the mandate of heaven. Is that like Solana's going to win? It's NASDAQ on the blockchain, blah, 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 super high performance. And Ethereum largely was considered to be, having its kind of, sort of death gasps as it was just slowly bleeding. And this was what contributed to a lot of that anger and frustration from the Ethereum community. Is like, what are we doing? We're just kind of watching our community just fall into the ocean as people go into base and they defect to Solana, and Ethereum mainnet is not getting any love, and there's no ambition in the community. And it feels like now, I can barely remember that ever happened, right? It feels like now Ethereum has the mandate of heaven again. It feels like all the action of stable coins and Wall Street coming on chain and regulation and BlackRock being bullish on the space, it's happening on Ethereum. And the DeFi story, the resurgence of DeFi, and even having like Project Crypto from the SEC being like, yes, DeFi, self custody, all of it is great. Like they're kind of implicitly gesturing at Ethereum, because of course that's where a lot of the assets that they're mentioning already live. This is not to say that it's Ethereum to the exclusion of everything else, but Ethereum very clearly is in the spotlight and in the center stage. The price has reflected that. And the question now is like, okay, we have Ethereum has this moment that is captured. How do you hold on to it?
It's unstoppable because you may mention there is some change at the Ethereum Foundation, sure, but this entire ecosystem was waking up because we were talking about Roman Storm's case, and this was not the only trial, not the only fight that was there from the Ethereum community. So people need the time to really come back to talk openly, because they were having those battles of their own. Like you've seen Consensus, you've seen Coinbase, you've seen Uniswap, all of them involved in that lack of clarity and really fighting on behalf of the entire blockchain community for delivering what we now start seeing as something widely accepted, and all the Wall Street coming and saying we've wanted to build it for a long time. So it's not a question whether you'll see any other changes at Ethereum Foundation, because everyone now is showing how they've been building on Ethereum and why it matters. And institutions are coming and saying now very openly, that's why we're choosing it. We care about all of those values. It's almost like now institutions are pushing the foundation and other coordinators to fight for privacy and permissionless access. The major asks are almost like in line with the 4 values that we're stating over and over again. So that coordination is being hastened to deliver privacy for institutions, to deliver security solutions, so we can grow those numbers to quadrillions of dollars, because that's what the size of a global economy are. And that's what I think keeps Ethereum going. That's and on the side, you have the new challenges of the decentralization of AI, of the AI governance, and all those questions. How we'll do it borderless. So this will be attracting a lot of thought leaders, a lot of researchers to gather around this Ethereum communities that now just research, and in all the cities. Like recently I've seen Ethereum London coming back to one big gathering again. We've seen here in Ethereum SF the celebration of 10 years of Ethereum. I was showing like how many of these communities around the world. It was like hundreds of cities coming together and saying, instead of focusing on the last 10 years, they focus on the next 10 years. Like people are excited to build more and more. And as are developers, there are thinkers, artists, these are lawyers, these are financiers. Everybody just thinks about what we're building next.
Tom, what's your take on the Ethereum resurgence?
Yeah, I mean, I think my perception, frankly, is like part of it is like, it's kind of you can't solve the problem without naming it. And I think the problem, my perception with old EF was like not naming the fact that like the killer app is finance, right? I think it was always dancing around what is the world computer for? It's for finance, and finance can take many different forms. It can be prediction markets, it can be stable coins, it can be DEXs, whatever. But like that is ultimately, I think, the killer app. And now it feels like we're naming it, we're putting our finger on it, and like leaning into all those like great components. That it's a great use case, and it's a killer app. And like I don't think there's anything like I think it never should have been anything like stopping, I think, the EF from like leaning into that. I think maybe my question is like, what do you think? Like, I think the other weird part was like, what role the EF is supposed to play, right? Like, is it supposed to be? I think to your point around January, a lot of people point to like Solana Foundation. They're like, great. It's like almost Silicon Valley, like it's top down. It's like authoritative. It's a single sort of consolidated product roadmap or vision, and the EF is much more disparate, right? It's more Linuxy, which is kind of a pro and a con. How do you think about like the EF and like what is inbounds, what is out of bounds? What do you think has maybe changed in those different areas?
It's like specifically what is different about the EF self-conception since the change in the administration?
Well, I think what changed is that now we very openly say that we can try to be the most vocal and the best version of ourselves. So you look at the foundation, you have a treasury of the foundation, and you have the group of fantastic researchers, coordinators, engineers, all of them. They can look at what needs attention, what needs coordination, what needs some more effort. And usually these are public goods projects, coordination between competing potential partners, right? Like so saying that whether it's interoperability, whether it's UX concerns, whether it's looking at the protocol direction, that you will have parties that are extremely valuable for the entire ecosystem, pushing things forward, but they have trouble to reach out to each other. And the foundation can go to all of these situations and help to connect and fill the gaps where there's no funding because there are the public goods problems. This is where we'll be super active, and what is very important is that we'll be very open about it, and we'll be trying to do it the best way possible instead of just trying to avoid influencing, like providing the impact at the places where it may matter. So we try to be everywhere and be more open to collaborations instead of avoiding those collaborations because avoiding feeling being associated with builders. Maybe one change that I hope is visible now is, in the past, very often the foundation was saying that our role is to continuously only support the small players in the market to grow. But when you think about neutrality, you want to really reward the winners, and it doesn't really affect decentralization because decentralization is built into the protocol. The rules of the game really support the new entrance, permissionless entrance of the new players, and they should see the examples that I can grow to whatever size I want on Ethereum, and removing that fear that the winners of Ethereum, that you support them, that somehow the protocol would fail in supporting decentralization. This should not be the case.
Yeah, that's actually a very good call out, because I do think, when I imagine, exactly 1 year ago, what was the EF doing or tweeting about? The answer was like probably some random tiny little nothing that was like not the main story of what was happening on Ethereum. And this fixation with watering saplings and showing them off to the rest of the class. It's like there's some role for that, but that's clearly not what the Ethereum Foundation, which is stewarding this massive and extremely important protocol, that clearly should not be its primary responsibility. And I think so. Here's one thing that I fear that I'm going to get a non-answer from you, but I'm going to ask it anyway. Is the one thing that the Ethereum Foundation has never talked about is the ETH price. And I also feel like it's obvious to everybody except the Ethereum Foundation that the ETH price really matters and actually is part in some way of what the Ethereum Foundation stewardship should be responsive to. And the Ethereum Foundation has always thought about and has explicitly described all of the constituents of Ethereum. And the constituents include developers, validators, users of the protocol, and ETH holders. And I feel like the way that the Ethereum Foundation cognized this sort of bubble map is that the developers are really big, the people at the foundation were really, really big, the validators were pretty big, and ETH holders were pretty small in terms of their voice and their ability to actually influence the overall direction of Ethereum. And it feels like that was a lot of what the revolt was about the ETH holders making their voice really, really heard in a way that was not reflecting what other people in the ecosystem were saying. And that is sort of part of the unspoken shift in the Ethereum Foundation that I don't know if you perceive that, or if maybe that's something that you would dispute. But that's what it looks like from my perspective.
Well, we understand the role of the economic security, and we understand that our greatest impact is that the Ethereum is globally accepted for the global economy, and that economic security has to support the global economy. And I think this means that everyone feels that they're talking about the same aspects of the ETH is there embedded natively into the growing DeFi ecosystem. And I think the realization that this is one of the most important aspect of how Ethereum is built is coming to everyone. And for the foundation, we have very specific like goals and responsibilities that we set for ourselves, the impact for values. But if we do it right, then very naturally the entire ecosystem produces like hundreds or thousands of the institutions, companies, individuals that contribute to the ecosystem, and that you were showcasing all the treasury companies and so on and so on.
Yeah.
So then we know what we have to worry about and where we don't have to be negative at all. Or overly alarming. We have to provide the guidance, so like what can be the risk in the future. The treasury companies, like we want to see the auditing, the explanation of DeFi protocols. So the L2s, we want to show the guidance for what are collaborations with L2Beat or maybe in the future other providers of this auditing services. Want to clarify everything because we understand it very well, because we hire top researchers and top coordinators to help with this. But yeah, coming back, I think it just creates this very positive mood around everything on Ethereum.
Fair enough. I mean, even this of like, you sitting side by side with Avichal as he's talking about this, financialized ETH vehicle feels like something I cannot imagine the EF doing a year ago.
Oh, there's no way.
Yeah.
Yeah. This conversation in general would not have happened.
Yeah. Exactly.
Token
It's like
vigilantism works.
It's pretty remarkable.
Yeah.
I mean, it's like it's pretty amazing. I feel like you talked about all the changes. I think just having worked with a lot of startups and CEOs and founders and stuff, like organizational change it's a cultural phenomenon. It's like it feels like the culture changed. It was like this catalyzing moment where the culture changed, and then downstream of that, like everything else, it like takes care of itself. But yeah, I mean, credit to Vitalik and Aya and co for realizing that needed to happen and actually doing something about it, and credit to Tomasz and the team for actually making it happen. It's not easy.
No, I agree. But I'm very compelled by this idea that I think I've described in the show before, which is that like very often there's like sort of these hidden wells of power that only really appear in times of crisis. So it's kind of like if you think of the Liz Truss, who was very briefly the Prime Minister of the UK, and basically she was like, you know what, I'm going to drop taxes, and the bondholders immediately revolted. UK bonds started plummeting, and basically she was fired like the next day, and they undid all the laws that apparently she was passing. And it's sort of not apparent that actually it's not the voters, and it's not the Prime Minister who actually runs the UK. It's actually the bondholders who run the UK, but it's only apparent in like the deepest moment of crisis, right? And the analogy that I think I've said previously on the show is that like ostensibly it looks like the EF runs it, or maybe the core devs run it, or maybe Vitalik runs it, but then only in the deepest moment of crisis you realize like, oh no, all of the punters who own ETH, they actually run Ethereum, but they only run Ethereum at the moment when their voice is heard the loudest, which is when just things are going off the rails, and like there's been this spiritual sort of divide.
Yeah, I think once again it was so many more voices. There were the builders, the developers. I'm
sure it's a very deep simplification.
We were told that there are no developers on Ethereum anymore, but they showed up, right? They showed up immediately. The crisis happened, and you had accelerators, developers coming and building, and now we talk more about applications as well. And we were told that DeFi is in crisis, and DeFi is now just flourishing again. I think through those interactions, hybrid solutions, DeFi will be really shining.
What do you attribute? Like, okay, let me ask you, what percentage of this change do you attribute to the price?
I think
if you had to give me a number,
it's really hard to find a causality.
All right.
With that, interactions
with that, we will conclude. Thank you so much, Tomasz, for coming on and taking our bullshit questions. Thank you, Avichal, for coming on again. That's it for this week. We'll be back next week. Thank you, everybody.